Realtor.com has updated their 2025 forecast. We've got the mid-year update, record high home purchase cancellations for June, tell you where that record lands, and mortgage applications for the past week. Today is Wednesday, July 23, 2025. I am Byron Lazine, and the hot sheet starts now. Live from Connecticut, here on the shore. I got to say, the last couple of days, Bobby, on the shoreline, the weather has been spectacular.
Yeah, it has been pretty nice.
It's like what you want. It almost feels a little September-ish. The humidity's kind of been gone. It's great. We're still in dog days of summer.
Yeah, don't fast forward on this so fast.
I said this to Haley the other day. We're in the dog days of summer. If you're like me, you're rooting for summer to come to an end. Can't wait for the closure of summer. But surprisingly, here in the dog days today, there's three topics I find fascinating, all three. This Realtor.com mid-year update. I've been waiting for this. So glad to have that, dig into it with you guys. The Redfin report on the cancellations, super interesting with where we're at. I find that really fascinating. And then some good news on mortgage applications. So I don't know, all three, these aren't fillers today. These are all three really good topics. Obviously, you got a lot of noise continuing with Jerome Powell back and forth with the administration. We talked about that a bunch this week, and the market just opened. I'm just hoping, yes, open door down 10%, down to 2.57. If you're rooting for their demise, like I am, just so I can be historically correct on my predictions, then another opening an opening here finally that is more aligned with the company values and value of the company. Let me know where you're tuning in from today. And let's jump right into it. Okay, so Realtor.com released their housing forecast mid-year update. And this is put on all their chief economist, Danielle Hale, as well as all their analysts, Sabrina, Hannah Jones. There's a whole list of them. There's about 5 or 6 analysts, economists over at Realtor.com that put this report together. Okay. When we were sitting, so I go to the Realtor.com event. They invite about 100 people to this event called Thrive 100. Last year it was in some fancy resort in Georgia in the middle of nowhere. I don't know, 3,500 acres or something. And we all put our everybody that was there, maybe 100 people at this dinner, put their over-under prediction on existing home sales, kind of over-under or whatever you thought the number would come in at. And I thought I think, at the time last October, I was a little bullish and I put down 4.2. I probably had a cocktail in hand. Oh, let's go with 4.2. We're going to be just behind is where Realtor.com's updated forecast is now coming in. Home sales are expected to land at 4 million in 2025. That's behind 2024. So less sales. And listen, your business like mine, my business here in Connecticut, we're doing more sales. We made a lot of adjustments last year to, where we're going to acquire customers, how we're going to acquire customers, how we're structuring the business, what we're spending money on, all of it. We went through our own little doge the last couple of years in our business, and sales for us have accelerated. Sales for you may have accelerated, or maybe you're in that spot like the last couple of years saying, hey, I'm tweaking things to have a sales acceleration year in my business next year, right? There's seasons to this. Takes time to build the infrastructure that you want to grow sales. Wherever you're landing, the market, Realtor.com is now projecting, will land at 4 million, and it's behind 2024 numbers. We're essentially at a 3-year run now of a real estate recession. The doomers on X think that some big drop off is coming. We know the drop off has already happened. Transactions have just plummeted with where rates are. President Trump has said multiple times he wants lower rates. And in fact, yesterday he said he wants lower rates because he wants lower mortgages. Okay. So he's connecting the lower rate. Doesn't always work that way. He's connecting the lower rate to mortgage rates. Nick Timmeros, Wall Street Journal. Trump declines to say if Powell should resign, but says he wants the Fed to cut interest rates to 1% in order to reduce mortgage rates. The reporter, do you think that Fed Chair Jerome Powell should resign? I think he's doing a bad job. He's going to be out pretty soon anyway. May is when he's out. In 8 months, he'll be out. But I'll call him too late. He calls him now Jerome too late, Powell. You got to admit, if you cringe at the nicknames, they're pretty. I mean, this one's spot on. Jerome too late, Powell. He was too late. He's too late all the time. Obviously, that's a debate right now. Is he too late in lowering? So Trump's position is he should lower rates, and he's saying lower the interest rates to 1%. I would completely disagree with that. That would be too fast, too rapid, too much, too soon. I don't think you're going to find many that are even in support of reducing rates to say let's go from 4 to or 4.25 to 1%. But Trump's saying in order to reduce mortgage rates, now mortgage rates are going to follow the 10-year. The 10-year, if you went out to 1%, I think that would have an impact on the 10-year. But the 10-year is not necessarily. You get a 1/4 point cut, which is what the Fed would do, a 1/4 point, not 3 points. You get a 1/4 point cut on the federal funds rate. You may not even see the 10-year move. Okay, we talked about earlier this week. The spread between the 10-year and the 30-year is improving to more normal times. Hasn't fully caught up with the 30-year fix. So he goes on with the back and forth on all of the things that the drama with the Federal Reserve spending $2.7 billion on their building and blah blah blah. But I thought it was just interesting that he's tying the desire of Jerome Powell cutting the Fed's rate directly to mortgage rates. Trump's a real estate guy. He gets it. One thing he does get is that if you take what now Realtor.com is projecting, existing home sales to land at 4 million, which is behind 2024's numbers, people are going to feel worse about the economy. If that's the number we've got for 2026, year 250 for America, people are going to feel worse about the economy. If you can add 1 million sales to that number, there's more business to go around for everybody. It's not just realtors and loan officers. It's inspectors, it's appraisers, but it's not just that. It's every handyman in every town and county in America. It's the cleaning companies. It's the landscapers. It's all of it. Okay. Realtor.com is projecting home price growth still for this year, despite sales being lower than last year now here at the mid-year report. If you're just joining us, we're talking Realtor.com's newly released mid-year report where they update where they were, where they're going. Sales home price growth to 2.5%, slightly above inflation. Mortgage rates ease slowly with average rates matching the prior year despite a dip to 6.4. So here's the thing on the mortgage rates. Danielle Hale was on Knowledge Brokers podcast earlier in the year. She said, hey, I think the year is going to be about 6%. Their official forecast was 6.4 on 30-year fixed. I said, hey, or 6.2 rather, at the beginning of the year. We talked to her slightly after. I said, are you keeping that? Remember at the beginning of the year, rates were higher. I said, are you keeping this low 6? Do you still think we're going to land around 6? 6.2 was her official forecast. She stuck with it at the beginning of the year. Now they revise mid-year, but they're not as bearish as most. And they're saying 6.4 is where we'll end the year on the 30-year fixed. Like, I think we would take that. I want 6. I want 5.9. I want 5.99 going into the spring market next year. I think you get that lift off. You could do about 4.5 million sales next year as opposed to hovering around 4 million like we've been. If you're just at 5.9, if you're essentially at a 6 handle, but 6.4 at the end of the year with where we've been, their average right now mid-year, they say we're going to average 6.7 for the year. That's where we're at today. Their original average was 6.3. So beginning of the year, Realtor.com believed, hey, you're going to have a longer run in the low sixes, sub 6.5. Now they've adjusted. It said we'll end the year at 6.4, but we're not going to get there in a hurry. We're going to kind of continue to hover around 6.7, and we'll get there somewhere at the end of the year. Okay. Existing median price appreciation now on the new mid-year analysis comes in at 2.5%. They originally had a 3.7. Existing home sales down another 1.5% after going up 1.5% last year. 4 million versus 4.07 million last year. Existing home for sale inventory ending the year at 16.9%. They had originally projected a 12% increase. Single family housing starts to go down 3.7%. Their beginning prediction at the year, so huge swing, acknowledging after 6 months, builders, they're taking it on the chin here with where interest rates are. They had it up 13.8% to start the year. Now saying updated projection on the mid-year is 3.7%. Home ownership rate remains steady at 6.65 plus percent. Rent growth still in line with where they were at before at negative 0.1%. This chart will be available for you in school for BAMX members. The inflation and the debt concerns keep mortgage rates higher for longer. Inflation is the reason the Fed says they don't want to make a move right now on rates. They want more. They want to collect more information. Albeit inflation has shown signs over the last 90 days to not have much of an effect from the tariffs. But inflation is the reason the Fed's holding strong, and that's because of uncertainty with tariffs. The debt concerns, I mean, you just look at the long, the 30-year rate right now on treasuries up over 5. That's what investors are saying. America, for us to keep lending you money, you got to come in at, and we'll go, I'll just bring up the 30. We rarely bring up the 30-year treasury. We always bring up the 10-year, but let's just bring up the 30-year treasury rate real quick. Where can I get this? I can probably get it anywhere on the internet. Here we go. Japan trade deal, by the way, today or last night was announced, and Dow is up 200 points. So as these trade deals trickle in, more money going into the economy. Look at stock market, all-time highs. There's the big bill. There's going to be a lot of money in the market. Stock market doesn't help everybody, but there's merger and acquisitions and investment going on. You get lower rates, everybody starts to feel like they're winning. Okay. Let's see. Where is the 30-year treasury? I'm going to find this. Shouldn't be that hard. This number is, here we go. Is coming in at about 5%. Okay. So this is the number that everybody else is saying to America, you got to pay us this number, 5%, if you want us to keep lending you money. Okay. Here's we're at kind of the peak here on the last 5 years. Our average of all our debt, $36 trillion, is 3.33. So we're now paying about 1.75 over the average of what we pay on our debt. And so this number you could refinance debt, essentially. If this number came back down to the average, kind of where we were in July of 22. And if that number comes down, you obviously see the 10-year come down with it. So the debt's a huge concern. The debt's a bigger concern because of where rates are at. All of the feel good about the market, about the future, about the long-term rate, about everything really comes down to rates. I just mentioned this real quick. Dow goes 200 points up after the Japan trade deal. So remember, I know Jerome Powell's all spooked about tariffs. Tariffs are more like a light switch than a tattoo. They can be removed. They can be negotiated. They're being used as trade deals. This is, it's been common sense to me ever since tariffs came out. This is the way I've thought about the toll booths on cost of goods sold. If you think tariffs is a tax on top of whatever you pay right now, it's just not. It's a toll booth on cost of goods sold. It's not even on the total price. So listen, don't be emotional about it. Learn about it and then factor it into your decision-making. The last 90 days, investors have just not really concerned themselves with it. Look at the stock market, all-time highs. Seems like Jerome Powell's more concerned about it than investors moving billions and trillions. I'll follow Wall Street. I'll follow the money all day long. Market's at an all-time high. All right. Also, speaking of all-time highs, 1 in 7 pending home sales fell through last month. This is the highest level recorded this time of year on record. So June 25, 14.9% of pending U.S. home sales fell out of contract. Last June, it was a full percentage point lower. June 23, we were about 14.5. So, pretty close to June 2023. June 22, 13.7%. That's the year the interest rates went up. But pre-pandemic, we were sitting at 11.5%, 12%, 11.7% in 2019. Those are the 3 years that 2017, 2018, 2019, before the pandemic, that's where we were at. 11.5 to 12% on cancellations. That's kind of what you normally see going back in time. Obviously, 2020, 2021, I'll kind of throw those out, COVID years. They get even lower. But 11, 12% normal, natural, 15% high. And it's the highest ever recorded, according to Redfin, on cancellations for this time of year. Okay, 15% in June speaks to the uncertainty. Hey, there's a lot of inventory now relative to where we've been over the last 5 years. Everybody says we're 4 to 7 million homes short to meet demand. Yeah, if it was affordable. Yeah, but if. Yeah, we're not 4 million homes short to meet demand, or builders wouldn't be sitting on 10 months of inventory. Yeah, but if they were affordable. Yeah, but if builders could build in the price ranges the majority of Americans can afford to buy. Okay, here's where the highest cancellation rates are coming in. It's the Sun Belt states. Oh, go figure, where the highest inventory is, where the majority of the building is happening. Jacksonville, more than 1 in 5, 21% agreements canceled in June. Highest share of all metros, that the 44 major ones that Redfin analyzed. Vegas, 19.7%. Atlanta, 19.6%. You got San Antonio, Tampa, Orlando, Riverside, California, Phoenix, Fort Worth, Miami, all in the top 10. Cancellations are common in Florida and Texas right now. There's a lot of new construction. Buyers have tons of inventory to choose from, whether it's cold feet or just, hey, I think I can go negotiate a better deal over here. They're on the rise in every major metro except 7. Okay, the biggest year-over-year increases in cancellations happening to be in California, Anaheim, LA. Okay, so they got a list here. I'll drop this inside of school if you want to pull it, of all those major metros. But all but 7 are rising. It's no surprise to me. There's just going to be more uncertain. Listen, sellers get uncertain when the market is shifting and DOM, days on market, goes up. Buyers start to slow down. I never had this many options. What should I be doing in a market like this? How deep should I be negotiating? Why isn't the seller responding to me? Well, because you came in 30 below, 30% below. It's not realistic. All right. Mortgage applications. Even with everything going on here, middle of the summer, mortgage applications, mortgage rates being kind of a little bit higher than where we were trending. This week they've been doing good, but this is the last week here. This data, mortgage applications, we see a good week. They increased 0.8% from 1 week earlier. The purchase index increased 3% from 1 week earlier. So a week over week increase. 22% higher than the same week a year ago. That's 25 straight weeks that were year over year higher. These are unbelievable numbers. And it comes at a time right now where you had rates going up. They've been cooling off this week a little bit. Look at this. The week that they're talking about 30-year fixed rate edged higher this week to its highest level in 4 weeks at 6.84%, while rates on the other were mixed, but still it goes up. Next week, I would expect this number to go up even more because we've come down to low 6.7. I don't know if you're seeing it. Hey, deals seem to be happening here over the last week. Now we know cancellations are probably not going to show up in the closings. And Realtor.com predicted that in the mid-year. Still at a low level in comparison to GFC and 95 and these other low levels that we've had over the last 30 years. But we are on the rise, which means, hey, the future could be really significant here on deal count if we get rates trending in the right direction. The administration knows that. They're pushing for it. And it's not all on Powell's shoulders, obviously, but certainly not budging here as it relates to next week's FOMC meeting. CME Group has the chances of a cut in the next 7 days when they meet at chances of a cut at 2.6%. So 97.4% chance that there will be no cut, 96% chance here on Polymarket that there will be no cut, 51% chance of a 25 basis point cut in September. Remember that that tweet we saw from Nick Timrose, Wall Street Journal. Trump wants a 3% cut, and we got about a 51% chance that we'll get a 0.25% cut in September. So significantly well off of where Trump wants to see things in the reality of what the Fed is going to do. 4.374 on the 10-year. Kind of middle of the road for the last month. Lower level for the last 5 days. That lower level in the last 5 days has given us some relief on the rates. Now at 6.77 as of yesterday on the 30-year fix. Bobby, was there some comments going on? I saw you flash something. Is there something I should be? Nate's got a ton of showings. Shout out to Nate in Jacksonville. No feedback, no offers, no answers. When I call the agent who showed, another home is great. So Nate's in Jacksonville, where we're seeing 1 out of 5 cancellations. I have one listing, a ton of showings, no feedback, no offers, no answers. So lot of inventory. We're creating the uncertainty, creating the cancellations, and creating mixed signals. Obviously, Nate experiencing that on that particular listing. All right, Bobby, I saw something else in the comments. Something about CoStar. What is
Stock question.
There's a stock question.
CoStar was up today. CoStar was up quite a bit, according to the BAM verified stock ticker, direct from Jim Cramer's desk.
CoStar up 5%. Yeah, love to see it here today. Good for them. Earnings, Q2 earnings growth. So they did earnings yesterday. Strong growth, moves up 5%. Listen, you look at the viability of CoStar really. CoStar, I just saw I don't know if you want to pull this up on Robert Refkin's Instagram, Bobby. If you can go to his Instagram, and there's a photo of Andy Florence at a Compass open house, and Robert Refkin thanking the CEO of CoStar, Andy Florence, for boosting the you got to go to you scroll down and I'll tell you where it is. Thanking him for boosting the listing. Move down. There it is on the left, in front of the yard sign. There it is. So that's Andy Florence. That's CEO of CoStar. CoStar being up 5% today. At a Compass listing and open house. And here's the commentary from Revkin. Thank you, Andy, for visiting our Compass open house today in Maryland. That's like Bethesda, Maryland is kind of the area for CoStar headquarters. They're in a couple different places, I think, but Bethesda might be the headquarters still. But they're in that DC region. When Zillow banned the listing, Homes.com decided to boost it with thousands and thousands of dollars for online promotion. So I know Compass has an antitrust lawsuit against Zillow saying, hey, you're not allowed to team up with companies. This certainly is this certainly is an example of teaming up against Zillow. Hey, I think what's fair is fair. Everybody can fight it out how they want to fight it out. Ryan Serhant said on Bam BBQ, I love the drama, he said, because everybody's suing each other. Let all my competitors sue each other. Point about this is, if you don't think CoStar can splash some money around, just look up their market cap, 37 billion plus, versus the market cap of literally everybody else. They can swallow up every company market cap. That includes Z. Okay. Like just an enormous market cap. They get a 5% bump today on earnings yesterday. I brought up Compass today on the main channel.
I was gonna say it's a lot of Compass talk. If only we had a big interview dropping today.
If you like, let me know in the comments. Do you like the BAM interviews? If you've appreciated those executive BAM interviews, I'm getting feedback all of a sudden, Bobby, because you're not muted. There you go. If you enjoy the executive interviews in the BAM channel, the one-on-one interviews that I do, we've got a big one coming up today. The Compass president of growth, Rory Galad, came right here into the Connecticut office. And how long was the interview?
So we got it down to just about an hour and 20.
Hour 20.
Right around there.
Yeah, I mean, it felt like we sat down for all of that, an hour 20. And I asked him everything that is on your mind. So Compass answering the hard, I didn't send pre-questions. They didn't have us post edit. I was able to ask every question I want to ask. That's going up today on the main channel, on this channel at Now Bam on YouTube. So make sure you're subscribed, hit the notification bell. This is an interview you do not want to miss. Ask them about Robert Revkin. I mean, I asked them about Robert Revkin's social media tactics.
Yeah, you asked him what it was really like to work for him.
And of course, I asked them about the antitrust lawsuit, the 3-phase marketing strategy, all of that. Incredible interview. And that'll be out later today. Join the community on School. It's the #1 agent community to close more deals. Build your brand, generate leads, and close more deals. Every single week, you get your weekly content drop in the Content Drop Classroom, hyper local templates, as well as your hot sheet download every single day. My slides, my notes, right inside of the hot sheet classroom each and every single day. Today, members only, 4:30 live with Chris Benjamin. One house, 7 pieces of content, 100 million in volume. School.com/BAMX, SKOOL.com/BAMX. You want to close more deals between now and the end of the year. The #1 agent community to close more deals. We pay you to be in the community. Zudelio, part of the package. Mosaic, part of the package. It's a $400 a month value just in those two platforms alone. Get into BAMX at 97. You can try it for free. Go to school.com/BAMX. Get in there today. All right, there's your hot sheet. Be on the lookout for the interview dropping today. Super spicy. Jeff, when are we going to get members only jackets? Jeff, just check the mail for the next 100 days straight. It's coming in the mail. Jeff, love you, brother. Appreciate you guys. We'll see you next time. Until then, toodaloo.